Hello everyone, welcome to your Algo Lab. If you're curious about what the savvy investors on Wall Street are doing, this episode is for you. Today, we're taking a deep dive into the latest filings from some of the biggest hedge funds and institutional investors. We'll break down their recent moves, highlight their biggest bets, and uncover the trends that could impact the market. So, without further delay, let's get started. A 13F filing is a quarterly report that the US Securities and Exchange Commission, SEC, requires from institutional investment managers with at least $100 million in assets under management. Known officially as Form 13F, these filings provide details about the equity holdings of these institutional managers, including hedge funds, mutual funds, and pension funds. These details can be accessed through the US Securities and Exchange Commission's SEC EDGAR system, which stands for Electronic Data Gathering, Analysis and Retrieval. Here are some key points about 13F filings. Institutional managers must submit 13F filings to the SEC within 45 days after the end of each calendar quarter, resulting in 4 filings per year. 13F filings disclose only long positions in exchange-traded stocks, shares of closed-end investment companies, and ETFs. Certain convertible debt securities, equity options, and warrants listed on the official list may also be reported. These filings only cover holdings of securities traded on US exchanges. Investments in markets outside the US are not included. We should understand that 13F filings have 2 main limitations: missing information and untimely data. First, 13F filings do not include a fund's short positions or international investments. If a fund is primarily net long, the filings can be helpful, but for net short strategies, they may be misleading by only showing long positions. Additionally, international positions are not included in these filings. Second, the data is often untimely. Institutional managers have 45 days after the quarter's end to submit 13F filings, so they may reflect decisions made months earlier. This delay is especially significant for firms which frequently trade and whose filings may no longer represent their current positions. Warren Buffett's Berkshire Hathaway is built around a few key principles: value investing, maintaining a long-term investment horizon, and adopting a concentrated portfolio strategy. Today, let's look at Berkshire Hathaway's 13F filing in detail. By compiling 13F filings, we can construct Berkshire Hathaway's equity portfolio. Let's begin by examining the sector allocation. Here, we present the historical sector allocation from the first quarter of 2015 to the most recent filing in the second quarter of 2024. The allocations are displayed in a histogram along with the underlying percentages. At first glance, Berkshire is heavily invested in financials, information technology, and consumer staples, which together comprise 83% of the portfolio. We can also observe that since 2016, Berkshire significantly increased its holdings in information technology, primarily Apple, while reducing its stake in consumer staples. The allocation in financials has remained relatively stable, indicating Berkshire's long-term bullish stance on this sector. Beyond the major holdings, there are some interesting movements in smaller positions. For instance, in the first quarter of 2022, Berkshire increased its holdings in the energy sector from 1% to 9% of the portfolio, reflecting their view of the Russia-Ukraine war's impact on the sector. The energy sector subsequently outperformed the market for the rest of 2022. Next, let's examine the individual stock positions, starting with the top 5 holdings in Berkshire's equity portfolio. These top 5 holdings make up 73% of the portfolio, indicating a high level of concentration. Here, we'll plot the individual stock prices, adjusted for dividends, alongside their holding positions in number of shares. We'll also compare each stock's annual total performance with its corresponding industry, together with their differences for comparison. As of Q2 2024, Apple represents 30% of Berkshire's equity portfolio. Although still significant, it has decreased from a peak of over 50%. Apple operates in the technology, hardware, storage, and peripherals industry, alongside companies like Samsung and Dell. When compared to its industry peers, Apple has consistently outperformed, though this outperformance has narrowed in recent years, indicating increasing competition and a potential slowdown in innovation. We can also observe that the technology, hardware, storage, and peripherals industry is highly cyclical, performing well during strong economic periods and underperforming in downturns, as seen in 2015, 2018, and 2022. Second on the list is Bank of America, which accounts for 15% of the portfolio. Berkshire has consistently increased its holdings in Bank of America in recent years. The bank operates in the diversified banks industry alongside competitors like JP Morgan and Wells Fargo. Bank of America consistently outperformed its industry peers until 2021, when it began to underperform. Additionally, the diversified banks industry is highly cyclical, showing strong performance during economic upswings and underperforming during downturns, as observed in 2015, 2018, 2020 and 2022. Third on the list is American Express, representing 13% of the portfolio. Berkshire has maintained a steady position in American Express, which operates in the consumer finance industry and is the largest company in this sector by market capitalization. Overall, American Express has outperformed its peers. The consumer finance industry is highly cyclical, performing well during economic expansions and underperforming during downturns, as seen in 2015, 2018, 2020 and 2022. Next is Coca-Cola, which accounts for 9% of the portfolio. Berkshire has maintained a steady position in Coca-Cola, a leader in the soft drinks and non-alcoholic beverages industry, and the largest company in this sector by market capitalization. Other major players in the industry include PepsiCo, Keurig Dr Pepper, and Monster Beverage. Overall, Coca-Cola has matched or slightly underperformed its peers. The soft drinks industry is considered defensive, tending to underperform during economic expansions, but outperforming during downturns, as observed in 2015, 2018, 2020, and 2022. In the fifth position is Chevron, which accounts for 7% of the portfolio. Berkshire held some positions in Chevron before the Russia-Ukraine war, with a significant increase in 2022. Chevron operates in the integrated oil and gas industry, alongside companies such as Saudi Aramco, ExxonMobil, Shell, PetroChina, and Total Energies. The integrated oil and gas industry displays cyclical behavior, performing well during economic expansions and underperforming during downturns, as observed in 2015, 2018, and 2020. Year 2022 was an exceptional year, as the economic downturn was partially driven by rising energy prices, providing upward support for the sector. Berkshire reduced its Apple position by 49% to 400 million shares. Completely liquidated positions include Paramount in the broadcasting industry and Snowflake in the internet services and infrastructure industry. Berkshire raised its stake in Sirius to $373 million, representing 0.1% of the portfolio. Sirius operates in the cable and satellite sector. New additions to the portfolio include Ulta Beauty within the consumer specialty retail industry and Heiko in the aerospace and defense industry. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.